Hello everybody, my name is Dr. Rafaro. Welcome to Nehemiah African Projects. Welcome back. You guys catch me all the time driving because we all strapped for time. So welcome to the channel. Again, this is Nehemiah African Projects. We like to talk about all things investing in African countries and also just diversifying, really opening our mindset to becoming investors and putting that investor hat on versus maybe just always sending money back home, from remittances to investments. And they're just providing a lot of opportunities for people to see what is out there, what are the different options that they can look into. But today's video, we're going to talk about the future of real estate investing for the U.S. African diaspora. Again, my name is Dr. Rafaro. I'm based here in the U.S., so some of the content that we provide is applicable to all African diaspora, but specifically tailored to those in the U.S. The future of real estate investing for the U.S. African diaspora. Now, there's a lot going on, folks. There's a lot of word just recently that the U.S. is considering to take, federal mandates to ban institutional investors. And this is really just part of the equation, but the core problem has been for some time the affordability issue of, everyday American citizens, residents, just really not being able to purchase homes. It's very difficult for Gen Z to pursue home purchase as part of the American dream to per se own a home of their own. And that's been very difficult with rising interest rates. So you have rising interest rates on one end. On the other end, the prices of average homes in America are well above $440,000 across the board nationally. Now in some areas, if you even find a home that's in the 400,000 range, that's a pretty good deal, which is really crazy because some of these homes just, 4 years ago, pre-COVID and coming out of COVID, were worth maybe $150,000 less or even more. And so those that were able to acquire homes from lending with low interest rate really capitalize on the opportunity. I'm grateful to God that I also had the opportunity to do that, and I still have a property that's still at 2.5% interest rate, which is unachievable in this day and age. You cannot find anything that low. The average interest rates have been around 6% for single family home buyers. And so it's been very challenging for the average person to pursue purchasing a home in the United States. Not to talk of African diaspora that have added challenges that they face from economic perspective. So you have high interest rates. They're trying to cut interest rates lower to try and make lending affordable, but the prices are still, home pricing, listing prices are still really high across the board. And on top of that, there's a lot of new development that's been going on across the country because of during COVID, there was a little bit of a shortage where, home building just came to a halt, right? So that definitely impacted a lot of people because there is a supply issue for quite some time. So that's been picking up. But the flip end of that is the cost of building that people don't realize has been astronomically increasing. So for home builders, developers, they not only have to, pay their contractors, get materials, which on another end, you have tariffs going on and things of that nature that are making it hard to get certain materials. But builders have to pay a lot of money to local government for certain permits and zoning fees, and so that's why they are in a fast track rush to try and build as quickly as possible. because at the end of the day, the initial cost that would have been the average cost for the end user home buyer, there's usually an added 20% to the listing price just to cover a lot of those costs, to which they're then passed off to the buyer. So home affordability crisis has been a huge problem. And so for the African diaspora, if you were able to acquire earlier on, you're certainly in a better position in terms of home ownership, whether you live in it or you're looking at it from a long-term real estate investment perspective. But now there's this new news here that, again, part of the equation that was driving prices high was not only building costs, was not only interest rates, and all these other things, but it was the fact that corporations have been buying homes. They've been buying homes, and towards the end of last year, I believe fourth quarter of 2025, investors, huge investors, were investing in big developer companies like Lennar and DRB, and just dumping massive amounts of cash into it, because they believe the average American is really not going to be able to afford. And so even developers were considering not only just developing homes and selling them, but developing and they themselves becoming the landlord, where historically they've never been in that business. So things are really changing, and you got to really pay attention to what's going on. So you got that going on. On the other side, there are other corporations that have been purchasing single-family homes. But the flip side of that, obviously that drives prices up. But the flip argument of that is that it only accounts for 5% of the real estate market in the United States. And so on the other end of the argument, you can say, yes, banning institutional investors is going to help, because maybe it creates more opportunity for the average buyer out there who just wants a single family home to purchase a home. And the reality is, yes, it will help, but not significantly. If you really look at the data and the economics, it's great to use the institutional investors as a cop out and say, hey, they're the reason why the prices are so high. But like I said, there's a lot of different parts to the equation, and that's only one of them. So how does this all impact the U.S. African diaspora? Well, as I mentioned before, you really got a hard choice to make. It's either you decide, hey, I really want to purchase a home here in the United States, or do I want to use that money and invest it elsewhere? You can invest it in the stock market, you can invest in other investments, or you can consider investing in an African country or in multiple African countries. And the purchase price compared to the United States is going to be drastically lower. In most African countries, they do not leverage the mortgage system that is here in the U.S. So we're talking about cash sales. We're talking about buying properties maybe from the as early as off-plan development and paying installments with no interest, which is huge and phenomenal. So then it comes to the point of, what are your long-term plans? Are you thinking about an African real estate investment opportunity as a means of earning cash flow, such as Airbnb? Or are you thinking about it from the perspective of, I think one day I want to move and actually live in an African country, so that being your future primary residence, which means that you need to actually travel and go see it if that's your option. Are you thinking about it to just buy and hold and then sell later, or have long-term renters, or what is the case? But in any case, it's much more affordable, and you're not facing a lot of the affordability issues that are here in the U.S. So that's a very viable option, folks. And that's not to say you can't do both. But the reality is, here in the U.S., you got to really think not twice, but 3 times before you go out and purchase a home. Because for a long time, interest rates have been low, and that's allowed people to purchase properties, through bank mortgage lending, and not really be in a rush to pay it off because they can afford the payment. But some people are purchasing, and I'm talking to people, I'm just straight talker here. This is just me straight. Some people are going out here in these streets and they are purchasing homes that they know are well above their means. And that is a problem, folks, because should anything come up, they forget that there is a cost to home ownership, the cost to home maintenance. They say that the average home owner in America is in their 40s, which is a drastic change from what it used to be historically. It means young people cannot afford homes. If the average homeowner who's purchasing homes is in their 40s, and then they say the average homeowner, long-term homeowner who's held their property for some time, is the average age is 55. So that tells you there that young people are not able to afford, but some people are going out and buying homes that they cannot afford because they want to flex. Some people are buying homes that they can barely afford. There's also a statistic out there that usually they always recommend that your mortgage and home cost should not exceed 30% of your total income. And there's people out there, they say the average homeowner who sustain their home ownership is well above 40%, meaning their total income that they earn from their jobs, whether they're a single earner or they're married and it's a joint couple income, household income. Let's say they earn $100,000. It means $40,000 alone of their take home, I'm talking about net take home here, is going to pay their mortgage, folks, which is outrageous. Because for most W-2 earners, if you are earning even for every dollar you earn, you're keeping about 60% of it if you're in that tax bracket, because tax is taken out. And out of that 60%, you're telling me that the 60% that you're taking home, 40% of it is going towards paying mortgage. So if you're not going into it and thinking 3 times before you purchase a home, you really need to, because you don't want to be what's considered house poor. And there are a lot of people in that situation. And then with economic stresses that are occurring these days, people really feel the pressure. They start to really feel the pressure, and any little thing can throw them off. And that should not be the case. 30% has always been the rule of thumb for your income to cover 30% of your income to cover your home expenses. But that's always included not just mortgage, but your utility bills, everything concerning your living expenses in terms of your home, where you live, whether you rent or you're paying a mortgage. But the average is above 40%, and prices are already high. So people really need to think twice. So, and to really sit down and consider that, okay, if I'm going to buy in the U.S., I need to go and find something that I can afford. Even if it means maybe I got to move out of the city or the area that I really like that's more expensive. Or I stay in the area that I like, but I downsize. Those are the realities of where we are. The other third option for U.S. real estate investing is that you come up with a plan to earn more money. And of course, you need to be really creative and disciplined and sacrifice some time and effort for you to achieve that before you purchase a home. Now, the fourth option, like I mentioned, is to consider African real estate investing. So that's the future of real estate investing, folks, for the U.S. African diaspora. There's a lot to consider. I think a lot of people are riding on, oh man, if they ban institutional real estate investors, it's going to really help me out. Not necessarily, because again, institutional investors only account for 5% of the total real estate market. And of that 5%, 10% of it, they usually go for apartments, large-scale apartments. The average American earner is not purchasing apartment buildings. They're trying to buy a single-family home. So think about it, guys. Let me know what you think. And really think about this. This is something to really consider. It really takes a mind shift to say, I want to get more value for my dollar, and where can I do that? And if you decide to purchase something in the U.S., that's not bad. I'm just saying, go out and get something you afford, and consider African real estate investing, because unlike here, imagine in 2 years or so, or even a year, depending on the price of the property that you're trying to get, you could actually own a home, maybe a 3-bedroom home, a 4-bedroom home, maybe a 2-bedroom apartment, whatever the case may be, and there is no mortgage attached. There's no 30-year mortgage. How freeing is that? So I hope you like this video, guys. It was real quick. The future of real estate investing for the African U.S. diaspora. Thanks.